CNBC TV18, embarking on a quarter century of excellence.
A volatile Friday saw the market end largely higher ahead of the long weekend, the Christmas weekend that is. It was a good week for the market, barring that one shakeout that we saw on Wednesday, which the market pretty much recovered by the end of the week. So, we'll talk more about that through the course of the show. This is Editors Roundtable, and we have all our editors here with us. Folks, it's been an interesting week, right? At one point in the week, you thought that, okay, this is it. The rally has ended, but guess what? The party is over, but guess what? Things came back and came back how? By the end of the week, we recovered almost everything that we lost on Wednesday.
Absolutely, Sonia. And, you get these occasional one-day kind of shakeouts, sell-offs, whatever you want to call it, on Wednesday, and then Thursday 100 and Friday 100 as well, almost 100. I mean, 75, 76 odd points or so. So, I mean, looking pretty good all around.
Looking pretty good. And, at one point in the week, on Wednesday, when the shakeout happened, someone used the word carnage. I was like, this is not even a 1 hour shakeout.
I'll tell you, on that day, on Twitter, on X, this hashtag called stock market crash was trending. So I asked somebody and they said, well, actually, it's been trending for the last 1 year. So it's like nothing to do with that day. But it's crazy, right? I mean, 1.5% falls.
Yeah.
It's
par for the course.
Par for the course, absolutely.
I think everyone talks about Santa Claus rally, but I think the last 4-5 years, we have seen that one day in December, from December 20th onwards, where you get 1, 2 or 3% cut. So our quota got fulfilled.
When the Grinch comes. Yeah. That's just that one day, right?
But again, Nigel, that point of every December we've seen 2-3% falls now. We need to put into context the fact that not every year the rally has been so strong in the markets, right? This year, particularly, the mid-cap index is up 30%, the Nifty and Sensex are up 17-18%. So we've rallied pretty hard. We've done most of the heavy lifting, so to speak. And then to correct just 2-3% is like
1%, 1.5%.
No, the mid-cap index was up down 3.5% on that day. So in that sense, it actually jolted a lot of people. And if they've shaken up, at least the traders got shaken out. I think it's good. You need that kind of day as well, wherein it
makes the market healthy as well.
Absolutely, and gives a reality check as well, right?
Yeah.
This is not a casino where every day you'll come and you'll make money and go out. So,
Mihir, how do you feel about the market? I mean, it's been a really, really good year. Absolutely. And we're taking stock of the year now, right? Phenomenal returns even in the broader markets. How are you feeling about it?
Well, I think the market's like the Energizer bunny. It's like so full of energy, just doesn't give up, right? And I was just looking at your CNBC US video clips from yesterday, where they are just talking about India,
Yeah.
So India has become mainstream even in the CNBC globally, I would say. So
that India versus China.
India versus China, and they are talking about India ETFs, and then they are talking about ex-China emerging market ETFs, where of course India will be a bigger weight. That's getting popularity. So I think 2023 is the year in which India has become like mainstream. And as we have discussed in the past, India versus the rest of the world has never been better.
Okay.
I was going to ask Mihir, markets we'll get to, but how's the traffic? I mean, you were running as a Christmas long weekend traffic.
Long weekend
festivities, and I think
absolutely.
You're off somewhere, Mihir, or you're here?
No, I'm here. The kids are here, so spending time with the family.
Nice.
Yes.
But it's been such a good year because people are feeling wealthier, and I think that's showing up in high-end consumption everywhere. You reckon it stays as solid as this as we head into the next one, Mihir?
I would think so, because the K-shape is still manifesting itself, and the hope is that the lower part of the K will also come back in good shape. I expect pre-election some more SOPs and subsidies for the weaker sections. It's only natural, and we need to basically take care of that section also. I just hope it doesn't translate to higher taxes for us.
I also sometimes wonder when this lower end, like for example, we spoke with V-Mart in the morning, right?
Yeah.
And that's one of the stocks where you can think of maybe it'll really play out in a big way when that lower strata really picks up. But apart from that, if that picks up, I mean, from a stock market point of view, are there really big, interesting plays whenever that picks up, whenever that pickup happens?
Oh, absolutely. The biggest one is FMCG. It's done nothing for quite some time now.
Yeah.
FMCG has done nothing. Even low-cost housing, those kind of plays can be there within the financials. Maybe even cement can do much better, because you must realize that 60% of the demand for cement comes from rural housing. So that can also do better. So those are the kind of plays that we can look at if the rural economy does pick up.
Two spaces that have done nothing this year, so far at least, some of the pharmaceutical names which have not performed as well maybe, and metals, right? It's not come back in a big way.
Yes.
Any of these sectors that you'd like?
I would prefer pharma because, as you rightly mentioned, it's not done much. But that's on the larger caps. If you look at the next level, which are not so small in any case, they have started actually performing. You know, and my guess is and my thesis is that the worst of the generic pricing in the US may be well past us, and some of the mid caps, larger mid caps in the pharma can actually do well this year.
Okay, Nimesh, what about the dealing rooms? What are they saying?
Well, you know, Sonia, as you spoke about, right, it was a volatile week. We saw that 3.5% dip on that one day, wherein it just actually shaken out a lot of traders and also. It was so much needed, right? Otherwise it was just a one-way rally, and everybody was like, "Acha, this can only go up and up." So in a way, it was good. But you know what strikes me the most is the fact that even this week we saw block deals worth 11,000 crores. This year to date, by today, the number has crossed 1 lakh crore. That's the amount of money the promoters, PEs have sold. And look at who's bought. The domestic investors, the mutual funds, the DIs, I mean the individual investors, they are the ones who've actually supported this market to a larger extent. You know, even this week when there was an intraday dip of 3% when we fall sharply, what helped the market was the DI flows, because after that two consecutive days, whether it's a Wednesday or a Thursday or a Friday, the FIs were net sellers, right? It's only the DI money which is helping this market to do so well. So I guess that domestic liquidity is what we need to focus on very clearly, because some measures to curb that liquidity can have a big impact on the India market. So that's something to track going forward. I guess the sector of the year was PSUs. You know, same time, coincidentally, it's the same time last year, December 22nd, I done a piece on a Nifty PSE index. The index then was 4,500. Today the index is at 7,600. The index has rallied almost 60-65%, and within that, after a big rally in the PSU stocks, you know, some stocks are up 3x and 4x. So that's the kind of momentum we've seen in the PSUs, and looks like that can only continue in 24 as well. So that's something to track going forward as well. I guess earnings will be an important trigger to watch out. Of course, next week will be very truncated, but start come January, the earnings season, especially the IT earnings, will be a big thing to watch out for. And remember, some of the IT names are going to see a change of guard as well, right? Tech Mahindra is one. There is a big talk about Wipro also seeing some bit of change as well. So IT earnings and leadership change would be a very important trigger to watch as far as that sector is concerned. Okay, you spoke briefly about PSUs, right? So Nigel, PSUs have been outperforming. The big question we're asking is the re-rating done, or is there more to come? What's the data suggesting?
Well, let me hop across to the wall and explain this piece. PSUs have seen a big re-rating. The question is, how much of it is done, or is there more to come? That's going to be the big question, right? A few years ago, the market capitalization was only around 15 lakh crore. In just 3 years, it's moved to around 50 lakh crore approximately. And as a percentage of the total market capitalization, well, the PSU basket occupies close to around 15%, as this pie chart will tell you. Well, let's track the indices itself first. The Nifty, it's done quite well. It's up close to around 35% approximately in the last few years. But the PSE basket, you know, which is traded, the NSE PSE basket, that's up by close to around 50% approximately. And the market capitalization point that I was making, well, from around 13.5 lakh crore, you thought it doubled in 2022 and it's done. Well, it's done even better. It's at around 53 lakh crore just in the last few years itself. What are the big reasons? Well, Prime Minister Narendra Modi's vision of making India self-sufficient, you know, make in India theme, whether it was shipyards, whether it was defense or even railways, well, that's one big theme that has played out. We have had the cleanup by the banking names as well, which has worked very, very well. NPAs, you know, have fallen drastically and the books have been cleared up. The focus on coal mining, on transmission, as well as on the power financiers, that as well has played out in the last few years. And add to that, you know, the increased investor interaction, which gives you a sense of corporate governance, better corporate governance, and the street likes that, and operating efficiency as well has played out in a lot of these names. But we're only focusing on one aspect, right? The market capitalization has gone up by close to 3.8 to 3.9 times. Well, look at the other factor. The profit number as well is up by close to around 4 times. So in isolation, we shouldn't look at the market capitalization, because in fact, the profit growth has been even better than the market capitalization growth. And if we just put those numbers to it, market cap up 3.9 times, well, the profit numbers up 4.3 times. If you look at it on a PE basis, well, 3 years ago, you had some of these companies that were trading at a PE of close to around 13 times, 12.5 to 13 times. Guess what? Because of the surge we've seen in the profit number and the estimated profits for the coming year, well, currently they're trading at around 12 times. So the big question is, how much of the re-rating has been done, or is there a lot more to follow? Well, time will tell. Mihir, what's your view on this entire PSU basket? Because that's clearly been a space where, everyone's been very, very interested in. How much of it has already played out?
I think we should look at it sector by sector rather than the whole basket. And banks you already talked about, clean up, growth prospects, all that. I think it was too undervalued to not perform, so to say. So this is the year in which the PSU bank valuations really caught up because, as you rightly mentioned, the balance sheets have been cleared and now it's time for growth on the corporate side. So banking is one big pack on the PSU side which has done well for good reasons. I think the other packs, like you mentioned, say for example the capital goods or the power sector companies, defense, those are actually new segments, I would say, in the sense that there was no theme on railway capex, there was no theme on defense indigenization, there was no theme on defense exports.
Yes.
And now after 10 years, we realize that renewable power is one place, is right in its place, but we need the backup by renewable, by non-renewable, which is the traditional coal-fired capacities to supply the base load. So I think in the last 2 to 3 years, these are new segments, I would say, that have emerged, and that can have a longer runway to grow. So these are actually not re-rating candidates, but I would say they are growth candidates.
Okay. I also want to talk about one of the stocks of the week, which was Varun Beverages, and I wanted your thoughts on it because, this whole consumption piece is picking up. Varun Beverages was up 20% last week, and of course, it's been a huge wealth creator since its IPO. But we had a chance to speak to the company, right? And the key takeaways from there were that they're seeing big volume addition to their portfolio because of the South Africa acquisition that they've made. They're saying that the South African market is 40% of the Indian market currently and is the largest beverage market in Africa. So there is this expansion plan that they're looking at as well. It's a 12% EBITDA margin business and the scope is huge. Currently, South Africa is a 1,600 crore top line business as well. They are talking about tripling or even quadrupling the Pepsi market share in South Africa in the next couple of years. So that's on Varun Beverages. They also talk about how Devyani International is, of course, getting into the Thailand market now. They have more than 250 restaurants planned in 2023 in India. They're opening 1 restaurant a day in India. So, this is a company that has great parentage. Ravikant Jaipuria, of course, he has grown these businesses very well. But if someone has missed out on this rally entirely, does it make sense to still add more?
See, I can't comment on individual stocks, but the fact remains that there are managements and companies which have really a global vision, right? And more importantly now, with the kind of valuations that Indian companies are commanding in the local markets, capital is not an issue. So if you have the right management and no problem of capital, then I think Indian companies can expand in the world. For example, in some cases, you can acquire an international business for say 1 or 2 times sales, when the local markets can give you capital at 6 times sales, 7 times sales. That really can, propel your growth prospects, because then you can grow not only organically within India, but globally. And we by the way, we saw that in the last cycle, remember, where Indian companies actually started acquiring assets overseas because capital was available cheap. The risk, of course, remains that there can be too much capital and misallocation in the longer term. But if the management is right and the strategy is right, it makes sense.
Okay, we'll do one thing. Many more questions for you. We'll take a short commercial break. On the other side, we shift focus to the world of AI. Generative AI is something that is the buzzword. Which are the companies which are jumping on the opportunity? We'll tell you about them in just a bit. Stay tuned.
CNBC-TV18, embarking on a quarter century of excellence.
Welcome back to Editor's Roundtable. We're talking about a couple of buzzing sectors. Let's talk about generative AI, which is a space that everyone is looking at now. 3 companies that are doing a lot of work in this space. Let's start off with Cyient, which has been the biggest mover this year. Now, Cyient has teamed up with Microsoft to drive innovation using generative AI. They already have successive tools in this space like SciFast, which is an AI-powered test automation platform, and SciArc, which helps regulatory experts by bringing a 40% reduction in their time and cost using AI technology. Now, we spoke to the company. Remember, the stock is up 185% year to date. The company said that there are many use cases in generative AI. There are a lot of opportunities around documents to be automated, and they maintain a very healthy growth of 15 to 20% in their revenues for FY24. Happiest Mind is the other company that we're looking at, which is doing a lot of work in this space. They have set up a new business unit focused specifically on generative AI, and they are targeting generating 20% of their business from generative AI in the next 5 years. One of the other pioneers in this space is Tata Elxsi. They have a product called Tata Elxsi Edge AI that's witnessing a surge in adoption. They have AI accelerators, associated technology stacks, which is facilitating wider adoption of generative AI tools. So, these are some companies, of course, that have had great returns in the past. But Mihir, my question to you is this. Many of these IT companies are, looking at generative AI as a big tool for cost reduction and better technological advancement as well. Do you think the returns have been factored into the stocks, or do you think that there could be some more to go?
Sure. I think there are a couple of ways of looking at it. There will be, in the long term, an impact on the programming part of it, but that will be in the very long term. You may actually see productivity of programmers enhanced. To that extent, you might see reduction in the programming hours required. So that probably may be a value destroyer in the longer term. But in the shorter term, what is happening is that there is I would say, arms race happening almost in the AI space, where large companies are now trying to develop their own specialized AI model for their specialized verticals. Now that kind of requires a lot of data tagging and processing, which may not be programming kind of work, but it will be more like the KPO work or the BPO kind of work. That might increase in the short term. That might actually explode in the shorter term. So that can be an opportunity. The only constraint will be training the number of people required to tag these gigabytes, terabytes of data, and tagging and sorting the data to train the AI models. So that's a big emerging opportunity which some of the smaller cap companies
But do you think for
exploit.
companies like InfoEdge, where there is, IT services, the hiring business has been sluggish for a while,
Yes.
or maybe Teamlease even, right? Staffing. For that kind of business, you think it's this is negative in that sense over a period of time? Because you don't need that many people.
But then you'll require more of these, KPO, BPO kind of programmers,
Right.
which also first of all need to be trained.
Right.
So I don't think it will have an immediate impact in the short term.
InfoEdge, of course, has got Zomato.
In terms of big themes to watch out for in 24, given that the Fed might cut rates by at least 75 to 100 basis points, earnings have been quite resilient in India. If I have to ask you 3 themes to pick for next year, what would be your top bets?
For India, I would say that we need to basically look at the physical asset creation theme,
Okay.
which means infrastructure, manufacturing, and real estate. I think the domestic theme and the physical asset creation will be the theme. We cannot grow at 7-8% just on services.
Okay.
And the government recognizes that we need physical asset creation to create jobs. So these are the themes that I would look at.
Mihir, IT services, I think that's one space which you think is still, it's got legs as we head into 24?
Well, relatively, I would still prefer the domestic place because while we are talking about slowdown, it was expected to be a recession in the US, but now we are talking about a softer landing, which means things may not be as bad. But the thing is that I don't really see upgrades coming in yet in the IT services space, which means that it will be more business as usual, high single digit or low double digit kind of growth. But when we are expecting 15% earnings growth for the overall market, it means that IT sector earnings growth may be lagging. Of course, some of the mid caps with differentiated strategies might do better, but in general, I think the sector would still be underperform versus the domestic place.
So let's wrap up. Any big plans?
I have a suspicion that
So,
this
this
trend that we are seeing will not be visible next Friday.
But whatever are your Christmas and New Year plans, don't forget that you're going to spend a lot of time in traffic wherever you go. So keep that in mind.
Stay at home, spend some time with your loved ones, call people over, have a good time, knock in a few.
Let them suffer the traffic.
And give them good entertainment when they come home. And good malt.
Okay, guys, Merry Christmas to all our viewers. Have a great one. We'll be back with you next week. Maybe some of us will be back with you the week after.
Yeah.
So have a good one. Thanks for watching.
CNBC TV18, embarking on a quarter century of excellence.